Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Gwen Preston, Vice President of Investor Relations for West Red Lake Gold Mines. Trades on the TSX Venture Exchange with the ticker WRLG. How you doing, Gwen?
I'm doing very well. Thanks, Keir. How are you?
Excellent. Thanks for fitting me in. I know you got a busy schedule. You're sort of newer into the role. I really look forward to unpacking that with you, but thanks for fitting me in here on this busy Friday.
Absolutely. Yeah, I just flew back from a conference last night. Super fun getting out there and talking about the West Red Lake story. So let's do that here as well.
Excellent. Well, let's get our 60-second pitch out of the way, and then we can unpack a bunch of it.
Sounds good.
First question. What is the name and stock ticker of your company?
The company is called West Red Lake Gold Mines, and the ticker symbol is WRLG on the Toronto Venture Exchange.
What is the mission and vision of the company?
West Red Lake Gold Mines is putting the Madsen Gold Mine in Red Lake, Ontario, back into production. It was in production just a few years ago under a management team that made a few errors, and it did not work under them. This management team has deep operating experience, and so we are rectifying those missteps and putting this gold mine back into production in 2025.
How many shares are outstanding?
There are 264 million shares trading right now. It's roughly 350 if you do fully diluted.
Any famous shareholders?
We have some very famous and good shareholders for sure. So the company came together really because Frank Justra wanted to create a new company to become his next success, building a mid-tier gold mining company. The Madsen Mine is the first asset for that vision. And he certainly stepped in, and he's about a 10% shareholder in the company. And then we have others. Sprott Resource Lending also owns quite a bit more than Frank, owns 22% of the company. That came about as how we bought the asset. We bought it from them. They got it out of the bankruptcy proceedings, but they have remained a shareholder, and they have participated in each financing since because they really believe in our team's ability to make good on this asset. And then we have a couple really strong institutions as well, like Van Eck, who are in their long-term gold believers who understand our vision.
Are you fully funded for 2024?
We have over $50 million in the bank right now. We're doing a lot of capital projects on the ground, so we are spending quite a bit of money. We will probably raise the last piece of capital that we need to get ourselves into operation and right through working capital needs till we're comfortably making money. So we have the money that we need for big spending on capital projects for most of the rest of this year.
What are your short-term catalysts?
Our short-term catalysts are really making sure the market understands how much work is going on the ground. The Madsen Mine, we have 100 people at work at the Madsen Mine. There's 2 development crews underground on rotation. There's 2 drill rigs constantly operating. There's a whole bunch of personnel on surface doing the work that's needed to make the changes so that we can put this mine back into operation in the middle of next year. So there's a huge amount of work going on, drilling, making sure we understand the resource really, really clearly, making sure we understand how to mine it, making sure we can move the material efficiently, and that we can do it all profitably by making some investments that weren't made the first time around. So making announcements about progress on all of those goals, those are the real catalysts for the rest of the year.
Lastly, what is your market cap today?
We traded about $155 million today.
Excellent. Thank you for that. Now, let's do what everybody loves to do. Not so much talk about themselves. For those of my viewers that don't know who you are, could you just share a little bit about your background?
Absolutely, yeah. So I recently joined West Red Lake, which is a move I'm really excited about. But until a month ago, I had spent 10 years writing a newsletter. It was called Resource Maven, or I was called Resource Maven. And that newsletter was about the stocks that I was buying and selling in the junior mining space. And it was a subscriber supported newsletter. So investors out there who love mining and understand that it takes deep knowledge and a connected network to identify the best opportunities in the junior mining space. Those investors, some of them subscribed to my newsletter to see what I was seeing and doing with my money in the space. Really amazing 10 years. I loved what I did. We had some really big wins, which was very fun. But then I was just ready for a change. 10 years is a long time to do one particular job. And I got to know the team here at West Red Lake, and there was a really happy coincidence that they needed someone in this role, and I was ready to make the change. So here I am.
So would you say that West Red Lake was just simply too good of an opportunity to pass up?
On many levels, yes, that's exactly what I would say. I mean, it starts with West Red Lake Gold as an investment. So I owned the company certainly before I started working here. And that ownership started when when the announcement came out that Frank Giustra was backing a group of experienced operators and builders to buy the Madsen Mine. And that really caught my attention. And then I was lucky enough to participate in a site visit to the Madsen Mine the middle of last year, a few months after they bought the asset. And they took me through what had happened and what they were going to do differently. And I really believed in the story once I heard it from those people at the site. So I was invested. I was already very excited about this story. And that was a year ago. In the years since, they have done so much of the heavy lifting. They've raised a lot of money to enable this process to happen, these fixes and this get ready to restart process. And they've done a huge amount of drilling to understand the ore body intimately, which is very important for a high grade ore body or resource like you have in Red Lake, Ontario. And they've really analyzed those things that didn't work out well the first time around, figured out what the fixes are. And now it's all about implementing the rest of those fixes, continuing to drill, implementing the rest of those fixes, and getting ready to start mining gold and producing gold, in a year or a bit longer than a year from now. So I'm stepping in at a time when we're just at we're like, call it the bottom of the Lassonde curve and about to start riding the golden runway up the other side. So really exciting moment to be able to step into this as a full focus.
So with your newsletter, you covered, dozens of companies and different projects, and you got a lot of variety in what you got to cover. Now you're a one company person. Any transition that you're sort of going through with that? How's that going so far?
I mean, it's really interesting, right? If you'd asked me a few years ago, I would have specifically said that I didn't want to work for one company because I really loved understanding lots of stories and being able to follow lots of stories. But I was ready to focus on one company. And maybe that speaks to sort of my depth of knowledge in the space and my desire to do more on one story instead of keeping up with 100 stories. So yeah, it's a transition for sure, but it's really fantastic to be able to step into this role and help explain this story. This is a bit of a complicated story, right? This is a mine that failed only a few years ago. So there's an elephant in the room for investors where you have to address what happened. There's a bit of complexity in trying to tell the story of what we're fixing, why we're confident in our fixes, where this is going, and how this is a foundational asset for a bigger vision for West Red Lake Gold. So it's a bit of a complicated story to tell, and I that maybe is the thing that makes it work for me. Like there's lots to do within this one story.
Right, and it sounds like there's a lot to do here over the next sort of year plus. Planning to get it into production. Look forward to unpacking some of that here today with you. Maybe that's a great segue for us to sort of ask for you to provide a little bit more of an overview on West Red Lake and its projects. Could you give a little bit more of a broad sort of overview on the company in terms of what it's got and what it's doing?
Absolutely. So West Red Lake Gold is a company that's existed for quite a long time as a very small junior company. That company owned the Rowan property, which, as it turns out, is only 30 kilometers about northwest of the Madsen Mine property. when Frank Giustra and the group around him identified the opportunity to buy the Madsen Mine, they quickly realized that West Red Lake Gold was a perfect vehicle through which to do that, because not only is it an existing Red Lake, traded public company, but it has this Rowan project that has a defined deposit on it as well, not very far away. So Frank and his group approached the West Red Lake crew and sort of entered into that company. And then that company was the vehicle to buy the Madsen Mine. So there are two properties. Certainly the Madsen Mine property is the focus. The Madsen Mine was in production from the 30s to the 70s. And in that sort of 40-year stint, they pulled 2 million ounces of gold out of the ground in rock that averaged 9 grams per ton gold. This is Red Lake, Ontario. This is high grade gold country, right? Just up the uptrend, if you want to call it, to the northeast are the Red Lake gold mines, which are the mines that made Goldcorp into the major company that it was. The discovery of really high grade gold at depth in the Red Lake mine transformed that company. This is a really high grade gold country. So there was 2 million ounces of gold mined quite a few decades ago. That mine, had a shaft down to almost 1,300 meters. These guys really went for it. But that was track mining with limited exploration ability. So they did mine some great gold, clearly, but they were very limited in their ability to actually understand, let alone follow these ore bodies as they sort of ebb and flow, wave, pinch, swell, all of those words, right? So some of the gold for sure has been taken out, but there's a lot more gold. And we know that there's a 1.7 million ounce indicated resource on the project right now that grades 7.4 grams per ton gold. There's about another 400,000 ounces of inferred resource at similar grade. And that's all around reasonably close to that old mining, but also in some zones that are sort of running along beside that haven't been touched so much. That's the main Austin resource. That's the zone is called the Austin resource that is within the Madsen Mine. This mine, that resource, is what attracted the previous operator to this asset. That operator was Pure Gold. Pure Gold was led by a group of people who had very deep capital markets experience, and they'd had some really great successes with discovery, building a resource, wrapping some really initial mine plans around it, and then selling those assets. So they were more early stage resource project experts. They absolutely, like I said, had great success in some of those early stage projects. They saw this opportunity, absolutely to their credit, but their plan was always to sell this asset. And it made sense. At the time, they bought it in 2016, and then, they got it into production in 2020. During that time, Red Lake was hot. This is when Great Bear was up and coming. So everyone was really excited about that. This is when Evolution Mining came in and bought the Red Lake mines. There was a lot of M&A. There were a lot of eyes on Red Lake. So the idea of putting Madsen back into production as Canada's next high-grade gold mine gained traction like you wouldn't believe. And there were a lot of suitors at the table. In fact, we've learned, even at this conference that I was just at, we heard yet another story of a suitor that was at the table, and the deal was almost done to sell the asset. But ironically, their marketing got ahead of them and their share price got too high, and those suitors all decided they weren't willing to spend the amount that the market cap had gotten to. And so Pure Gold was left having to actually build and operate the mine, which was never their expectation, and it wasn't what their experience set them up to do. So they didn't really have the mine building and operating experience, and that management deficiency really percolated down through the ranks. There were a lot of really good people who worked at the Red Lake mine who sort of knew what needed to be done to make it work, but the directive from on high and the lack of money from on high made it so that they couldn't do that. Management kept changing, direction kept changing. Really, it sort of comes down to they were scrambling because they didn't have enough money and they didn't have enough expertise from on high. And that's what made it fail. We can talk about some of the details of those, some examples of the where those decisions led and why that made the mine fail. But that's really what happened. And then, so because those errors ended up in place, then the mine failed after only 14 months. And that's when Frank Giustra and his team came in and saw the opportunity to fix those and put this mine that, has a lot of potential into production.
pennies on the dollar deal of the century, some have called it. So a good deal's been done, and it's now owned by West Red Lake. So good stuff. Just to sort of ask a bit of a question, sort of in late April, an updated mineral resource estimate, MRE, was released for the Rowan project. It seemed like investors weren't really too happy with it. Shares dropped a little bit subsequent to that. And it also looked like the report was a little light on ounces. Could you sort of explain a bit about that, why that came to be, and what's up with that?
Absolutely. So Rowan is the project that the company already owned before buying the Madsen Mine, the one that's 30 kilometers to the northwest. And Rowan is a great additional opportunity for the Madsen Mine in a few years. It's a high grade resource. It's fairly close to surface. It'll still be an underground mine, but it's not deep. The resource that's defined, it's quite close to surface. We've already been doing baseline studies in preparation for the idea of turning that into a satellite mine that sends mineralized material to an operating Madsen mine. And the reason to do that is that right now that Austin zone the average grade there is 7.4 grams. The recalculated resource that we have at Rowan is better than 12 grams. So if you can add some 12 gram per ton material to a 7 or 8 gram, mine feed, that really sweetens the outcome, right? So that's the concept there. We did absolutely redo the Rowan resource. And that's really about this team coming in, this geologic team coming in. They immediately jumped into drilling at Rowan because there was already a sort of permits and a drill program underway. And then they wanted to, when you come in as a new team on an asset, you need to own that asset geologically. You need to really have full confidence in the geologic model and how the resource has been built. There's lots of different ways to take those discrete drill intercepts and model them into a mineralized zone. There's different ways of doing that. And so this team did its approach to modeling it into a mineralized zone. And yeah, we lost ounces, absolutely. It was over 800,000 ounces, and now it's more like 300,000 ounces. But the grade remains very good. And now it's a resource in which this team is totally confident, like high confidence that this resource is where it is and is the grade that we expect. And a bunch of the areas, they now have a very clear idea of what to do to likely grow the resource from here. So yes, it's a step back, and perhaps the market didn't love that. The market never loves when ounces disappear, so to speak. But at the end of the day, confident real ounces are what actually matter, especially when you're talking about a company that wants to mine those ounces. We really want to mine those in only a few years. This isn't about defining ounces in the ground as as some sort of leverage play. This is a real mining opportunity for us. So we're very happy that we redid that resource and that we own it. We're confident in it, and that we can move forward on Rowan as part of the bigger picture for Madsen.
And the existing Rowan resource, the previous one that your team inherited, that was really like an inferred resource, which means that it's not measured and certainly not measured, certainly not indicated. So again, it doesn't necessarily mean that the ounces won't sort of be found through further exploration. It's a more conservative estimate, would you say? Is that the right term?
That's exactly it. And I think a good analogy or another example of exactly that is the 8 zone. So the 8 zone is really deep in the Madsen mine. In fact, the shaft that the old timers drove down to 1,200 meters depth, they did that to access the 8 zone, which is a really phenomenal zone of mineralization. I told you the Austin is like 7.4 grams. So that's what the resource is. The 8 zone, the resource that's currently on the 8 zone is 18 grams. Phenomenal body of mineralization down there. When this asset came out of pure gold, the zone down there was defined at roughly 300,000 ounces, grading 25 grams. The resource was redone on a more conservative footing, like you say, and it came out at about 100,000 ounces. Well, it's actually 80,000 ounces at 18 grams indicated, and then another 20,000 ounces roughly at 14 grams. So yeah, we lost ounces and the grade came down, but we're very comfortable and confident in the resource that is down there. And now we're going to go down later in the back half of this year. We're going to get down and drill that resource. And there's hits that are, a long down plunge from it that are disconnected from the resource. And we're going to try and fill in that gap and see if we can build it right back up to what it was. We see absolute potential to do that, but we'd rather start testing that potential from very confident, safe footing rather than sort of arm wave and get ahead of ourselves on any resource.
Great. Thanks for clarifying that. Do you have any sort of like guidance, like in terms of like what a mid-tier producer would sort of be? Has the company provided any guidance in terms of what it would hope for in terms of annual production?
So, there's a big range of mid-tier producers out there. Our first goal for sure is to get this Madsen Mine back in operation. And we need to, the first part of the first goal is to get it into sustainable, production that people realize is going to continue, right? Because that's certainly what did not happen the last time this mine was put into production. So we haven't put our PFS out yet. That will come out early in 2025. A lot of the work for the restart will have already happened by the time that study comes out, but that's the nature of what's required to go into these official studies. Once that comes out, we will be able to talk about ounces and cost and tons and all of those with clear numbers. I can say that we are aiming for a mine that's producing 60 to 70,000 ounces of gold a year, in that ballpark, which it makes sense based on the previous feasibility study and previous operating metrics of this asset. So 60 to 70,000 ounces of gold at reasonable costs and with very little debt or debt on the books or additional capital needed to get there, because we're doing the work now with the money that we have in the bank now. So the mine will look good, I'm pretty sure, when that study comes out. That truly is the premise of this entire operation. From there, we really see opportunity to make that asset, that production, bigger. The 8 zone is one such opportunity. Really high-grade mineralization sitting at the bottom of a shaft. We're dewatering down there. We're about halfway down. We're rehabilitating the shaft as we go. So if we can get down there, dewater, define a bit more, or even just mine what's there, you pull 200 tons per day out of a zone like that and add it into the feed that's coming out of an Austin zone, and you transform the grade that's going into your mill, right? You mix 7 gram per ton material with 18 gram per ton material. That really increases your production. Similarly, the Rowan project, you add some of that 12 gram per ton material in to that 7 gram feed. All of a sudden, your ounce count can really rise. The mill is also expandable. The mill is a great piece of infrastructure. It works really well. They were getting great recoveries from that surface facility. And it was built with a footprint where you can add the bits that are needed, like another crusher, another mill, to expand from 800 tons today to 1,500 tons per day with ease, really. It wouldn't take a lot of capital and it wouldn't be difficult to do. So there's real opportunity to turn this from a 60 or 70,000 ounce per year producer to something more substantial as we are able to get down to those other zones and just transform the grade and potentially the tonnage throughput of the Madsen Mine.
Excellent. Thank you. So this mine was in production before under a previous operator, Pure Gold. You mentioned a little bit or alluded to it that they were basically sort of kind of forced to put it in production. Production's not really their forte. They're capital markets. They build things to sell. What were some of the historical challenges, or what were some of the reasons why it didn't work that you guys are having another look at and will rework so that it has a chance to be successful under your team? Absolutely.
So there's a few linchpins of the stumbles there. So I would say, first of all, management was trying to do this sort of as quickly and with as little money as possible. And that was part of them wanting to sell it. The faster you go, maybe the more frenzy you get around someone feeling the need to come in and buy the company before somebody else does. Spending not as much money. They wanted to keep their share count tight so that they would be attractive to a potential acquirer. And so they were constantly trying to do things without enough money and without quite enough expertise and perhaps too quickly. And so from the top down, that led to things like not doing enough infill drilling. So they started mining in an area called McVeigh, which also wasn't what the feasibility study had outlined. The feasibility study had outlined starting in the main Austin zone. But it was going to take a fair bit of development, underground development, to get into the heart of the Austin zone. So instead, they started at McVeigh, which was near surface, which was a more recently delineated zone. And McVeigh has some great gold in it, undoubtedly, but they probably drilled McVeigh on 15 to 20 meter spacings, which is insufficient for a gold system like what you get in Red Lake. These are narrow, they're high grade, and they don't, if you have a hole here and a hole here that are 15 or 20 meters apart, you cannot just assume that the gold goes smoothly between those two intercepts. You need at least two more holes in between them to understand exactly where that vein goes. The team on site understood the need for more drilling, but they weren't able to do that. That wasn't an opportunity that was given to them from management. So they went in and started mining at McVeigh without a sufficiently detailed understanding of the ore body. So you can say they lost control of the ore body. But they were in a rush to get to production. And so they started mining a little bit blindly. And then they also, again, the sort of lack of expertise on high meant that there was, and the decision, the desire to do things for less money meant that they chose mining methods that weren't perfect for the ore body. They chose less expensive mining methods instead of some that have a slightly higher cost. That led to things like overbreak. So instead of just mining where you think the gold is, you end up mining some of the halo around it that doesn't have any gold in it. So they weren't
Reducing their head
necessarily,
grade.
yeah, exactly. So between not really being able to follow the mineralization accurately and overbreaking, they ended up delivering material to the mill that graded 3 grams per ton instead of 8 grams per ton.
Wow. What a
Expectation was 8,
difference.
right? And it costs the same amount to move the ton of rock and to
Right.
process it. So if you
Yeah.
have less than half the amount of product in that rock, gold in that rock, then you expect that's a really weak starting point. And then so the mining method and the control of the ore body was absolutely an issue. Then there was also some financial decisions. Like I say, they never really had enough money to build. So they took as much out of the build budget as they could and shunted it over into the operating budget, which I guess works to keep your build cost constrained, but it doesn't do good things for your operating budget. In fact, it really increases it. So they leased all kinds of things that you would usually build, they leased, like every building on site. They didn't build it. They just used ATCO trailers that are high cost to lease. They leased a primary crusher, and you could buy a primary crusher for only a few months of the lease cost that they signed up for.
Wow.
That pattern repeated in all kinds of places across the property. And it meant that their operating costs were much higher than expected. So their grade going into the mill was much lower and their operating costs were much higher. I will say that in the last few months that they were there, they brought some really great management level people onto the mine site. And those people enabled those on site who knew what needed to be done to do what needed to be done. And the mine started to turn around. Like in the last few months, they were producing 6,000 ounces of gold and things were starting to go better. But it was a bit too little too late, especially because COVID then layered on top of everything. And so the bit of rug that was left underneath them, COVID sort of pulled it out. And that's when Sprott Resource Lending called the debt and it was all over. So those are examples of why the management decisions filtered down and sort of infected an asset that really had good potential and good people on the ground, but it wasn't able to live up to that potential.
Excellent. Thank you for giving an overview. I hadn't ever really heard it like that before. I think that's great. And I think investors should understand the distinct difference between the previous operator and then your approach. Because again, it can be a little bit hard to get people to, I guess, understand or trust that just because a different team owns it, that the mine will lead to a different level of success. Sounds like you've got a couple of things that will immediately help cure that, such as delineating and delivering the proper grade, having owning things rather than leasing it to reduce your op cost, and maybe
Mhm.
some other efficiencies as well. Why don't we touch base a little bit on your sort of cap table stuff, if you don't mind?
Sure.
I know you mentioned it at the beginning on our 60-second, but just for our long form viewer that might have missed it, could you go over your cap structure again? How many shares out? How many fully diluted? Major shareholders? Blah blah blah.
Absolutely. Yeah. So we have 264 million shares trading right now. The fully diluted count is around 350. So there are a good number of warrants out there. And those warrants are a result of the fact that we have been very successful raising money. So in the last 10 months, we've raised $100 million, which is a notable amount in the junior mining space for sure. And I think the fact that investors were interested to support us to that level speaks to the potential of this asset. And a lot of the investors who came in, we had a lot of institutional holdings. So like some very aware gold funds like Van Eck is a really, that's a name that stands out there. Delbrook. These are groups who understand gold, understand this golden runway. So the re-rating that can happen as a company goes from spending money, which is clearly what we're doing today to trying to get this thing back into production, go from that to making money. That's a legitimate re-rate. Like that's a re-rate for a stock that comes with very tangible rationale. And that's where that's our goal. That is what we are doing for the next year. So there's good money that has come in and is here for precisely that ride. Frank Giustra is clearly the most famous name. Well, Van Eck's pretty famous as well, but Frank Giustra is our largest individual shareholder, and he's a real believer in this stock. He's quite involved. He's in communication with the team on a daily basis because he's an invaluable resource. The expertise that he has around how to do these things is really, it's irreplaceable. So that's our sort of cap table. Are you still there?
Yes, I'm still
Sorry.
here.
My computer did something weird and made you disappear. So that I'm like, are you there? Because I can't see you anymore. Sorry.
No
I can't
worries.
even
I'm still here, and you're still recording.
Okay, that's great. Sorry.
Yeah, right. You don't need to look at me.
I don't need to look at you, and apparently I can't because you totally disappeared. So we do have some great shareholders. Frank being lead among those. Very patient capital on the expert gold side, and we're really working to sort of help, call it the generalist investor, understand why gold now, and why West Red Lake offers particular leverage in a rising gold market because of that golden runway position.
How much capital do you have now?
We have $52 million in the bank right now. So we are very healthy. Our treasury is very healthy right now. We are doing some big capital projects over the rest of this year. One, we put out a news release just a few days ago introducing some of those projects. We will detail them more as each happens. But one example is the connection drift. So the mine as it exists right now has two portals with declines. So great infrastructure there. But those two sides of the mine were never connected. There was no drift driven between the two sides of the mine. And that was one of the things on the list that impeded the efficiency of the operation, right? So there was trucks trying to go in and out and mine this side. There was trucks trying to go in and out and mine this side. That creates a lot of congestion. These tunnels can only handle a truck going one way. So you end up truly with traffic jams underground. And in addition, the trucks that were coming out the one side had to drop their ore because they were underground trucks. The ore had to be reloaded into a surface truck because it had to drive across two public roads that you could only drive across in daylight hours. So that was a real limitation to get to the mill. Dropping ore and reloading it is expensive. And in a system like Red Lake, where there's lots of free gold, you actually leave gold on the ground when you do that. So lots of reasons why you don't want to do that. What we're doing is driving a connection drift between the two sides of the mine so that we can have a circular mine flow. Trucks can go in one side, pick up mineralized material, come out the other side right beside the mill, and put it straight where that mineralized material needs to go for processing. So that is roughly a $10 million project. So We are doing that over the course of this year, of the rest of this year. And there's other things. We're buying that primary crusher that the prior operator did not purchase. We're installing a camp. The prior operator did not install a camp. There's a great mining population in the town, in the area of Red Lake. We have 100 people working on site right now without a camp, and that works because the vast majority of them were pulling from the local population. But we are going to need to be able to house some people, and the need to house enough people to run a fully staffed mine. For the prior operator, that meant that they tried to rent rooms and houses and hotel rooms around Red Lake. That ended up very sort of logistically complicated and expensive. So we're building a camp on site. Lots of projects like that. Another really important project that we're doing is test mining and a bulk sample. We need ourselves and investors to feel really confident that we do have, as I'll call it, control of the mineralization in the way that the prior operator didn't. They were a bit scrambling to try and follow the mineralization. We do not want to be scrambling at all. We want to do a bulk sample to give ourselves confidence in our resource block model. And then we are also, we're doing a year at least worth of stope defined inventory. We know exactly where we are going to mine for the entire first year of operation. So that there's lots of projects underway at the site. So we certainly are spending a fair bit of money. The $50 million that we have in the bank right now won't get us all the way through to that restart decision. We will need to raise some more money, but it's going to get a lot of really important work done, and we'll figure out how to access more capital later in the year.
Yeah, good point. You guys have done a couple of financings this year. You did one, 22 million US, which was sort of a gold linked note, not equity dilutive necessarily, but like tied to future production. And then it looked like it was a little bit of a surprise when he did an oversubscribed $33 million equity offering, which I guess had a price of around 72 cents. And it came also with a full warrant. So it shouldn't have really caught people off by surprise then, in terms of, that there are some fairly substantial costs for restarting the mine.
I mean, should or shouldn't is a bit moot. It did, sure. Is what matters. And we can see that in our share price, right? I think it's easy for the investor to want this to be easier and faster and cheaper than it is. There's been $350 million invested in this asset before we even bought it, and invested recently. This isn't like really historic. This is recent. There's a lot of very good infrastructure on site that we don't need to build, from the tailing facility to the mill to the water treatment plant, all of the underground development. There's a huge amount of very good infrastructure. So when you look at that, it's easy, I think, for investors to want this to happen more quickly and cost less than it actually is doing. But West Red Lake's premise from the very beginning was that we were not going to restart this mine until we were ready to do it on a mine plan that we were confident would be reliable, we would be able to maintain the production that we say we're going to do, and that would be profitable. And so there's a bunch of work, like all of the projects that we've just been discussing, that are required to make that goal happen. And so should we have maybe done a bit more to communicate all of the work that was going on? Perhaps that's the case. I'm not sure. But the goal from here is to make sure that that understanding is out there in the market, that it's not that it's understandable that investors also get a little bit cynical about the risk that management companies are wasting money in junior mining. That's something that happens, and it's really unfortunate. That is not what's happening here. What's happening, and it's not that the project is giving us a bunch of negative surprises and that we're having to pour money into negative surprises. That is also not the case. We're just working through the process that is resetting a project and doing it properly on every level. And that just takes time and money. I'm optimistic that we can really push the message over the next little while of all the work that's happening on the ground. And the sentiment can shift from, oh, this is taking a while, to, oh my goodness, they're going to be in production in a year. This is happening quickly. I really think that we're on the cusp of that shift. And so this is, I think, sort of the bottom of the Lassonde curve. Like, I think we're going to start doing an accelerated golden runway from here as we can get that message out to the market.
So let's turn our attention to back to you. What's a typical day look like for you in your new role?
Whew, there's lots to do. A fair amount of conversations like this, making sure, and whether it's on camera and going to be sent out to an audience, or whether it's with an individual investor who's calling to make sure that they understand the story, either before investing or because they have invested. A lot of conversations like this. I said before, this is a complicated story, so it takes a lot of conversation to ensure that people understand what we're doing, why we're doing it, and have confidence in the plan. And so a lot of conversations like this in different formats, written conversations, verbal conversations, a lot of forward planning. So what can we do to make sure that that message gets out there to as many people as possible? Planning around marketing, planning around conferences, a lot of time spent ensuring that everybody on the team understands what's going on. So, we are pushing to a pre-feasibility study that's going to come out at the beginning of 2025. And so that's a process. SRK is doing that for us. But simultaneously, we are doing our internal mine restart plan, which is, doing a stope defined mineral inventory for at least the first year of operation. We're doing constant underground drilling that's better defining the resource, and in several places looking like it's growing the resource in really useful ways. We're doing a lot of, I need to make sure that I understand everything that the operations team is doing. What exactly have you done to the shaft, and what is happening with the shaft? What's happening with the dewatering? There's a lot of data or knowledge transfer that needs to happen on an ongoing basis. To make sure that I can tell the story accurately to the audience, because really telling the story is what my job is all about.
Well, that's excellent. And why should investors consider investing in West Red Lake right now?
I mean, that's really the question, isn't it? I truly believe in this golden runway. So I have been an investor in junior mining for almost 20 years. And there's a lot of risk in investing in junior mining. And within that, there are a few patterns that are reasonably reliable. Certainly a discovery can send stocks to the moon. That response is reliable, but it's hard to find the right stock. So it's not reliable in terms of buying an explorer and getting that response. The pattern in junior mining that is reliable is the golden runway, from construction decision on a good asset. And it's usually only pretty good assets that make it to a construction decision, because it's such an arduous path to get there. So the re-rating that a stock gets from construction decision to first pour is very real. It's incredibly reliable. And it can be very significant. It can be, 100%. It can be several 100%. Like, you can multi-bag on investing in a company as it builds a mine and goes from spending money, which is what happens the entire decades prior, from discovery through all the studies, through the engineering, through the permitting, through the financing, through the build, when they go from spending to making money. There's a tangible reason for that re-rate. And that's the investment thesis for West Red Lake Gold right now. We are doing that work on an accelerated pathway for the next year, right? A lot of the capital is already spent. A lot of the requirement is already in place. We're doing the last few pieces of the puzzle, and then we're going to be able to turn this thing on in a year. And there's not a lot of companies that are turning on gold mines in 2025, let alone ones that are going to tap a very rich body of mineralization. So accelerated golden runway, the re-rate potential of that's the investment thesis for West Red Lake Gold.
Well, I know you're not too far removed from wearing the newsletter writer hat. So maybe I'll ask you just a bit of a broad question. Thoughts on the mining and metals environment right now?
Yeah, interesting space, hey? So,
yes.
Isn't it always? So we'll limit our conversation to gold, because certainly that's the topic at hand. I mean, gold, the metal, has done phenomenally well, as we're very aware. The thing that's been lacking is performance in gold stocks, right?
Yes.
And so what is going to happen? What will make gold stocks start to really incorporate the gold price? Because we want that as gold investors. Most of us play the equities. And so what's going to make the stocks move and really reflect the fact that we are at, 2350 gold? The reason that they aren't reflecting it, my understanding of it is, for the past 20 years, every time gold has gone on a run, that run has happened because Western investors start buying gold. And they buy gold for the reasons that we're very familiar with. They buy gold because of inflation. They buy gold because of what's happening with interest rates. They buy gold because of overall risk, whether it's geopolitical or economic. They buy gold for those reasons. When they're doing that, they also buy gold equities because it's Western investors who play the gold equities. So gold and gold equities have moved together when they've been ascending over the cycles of the last 20 and 30 years. This time the move is not coming. Gold is not moving because of Western investors. It is actually surprising Western investors. Instead, gold is moving because of China. The Chinese central bank is buying gold hand over fist. That started in the middle of 2022. They're buying oodles of gold because they are trying to hedge the now very real risks from deglobalization and de-dollarization. Two things that were really sort of nebulous concepts for a very long time, but that became real with COVID and the invasion of Ukraine. Deglobalization, de-dollarization, they're real, and China's trying to move away from its reliance on the US dollar. It's doing that through gold. It is buying incredible amounts of gold. But it's not just the central bank in China that's buying gold, it's the Chinese citizen that is buying gold. If you look up activity on the Shanghai Gold Exchange, it has exploded for similar but different reasons. There, the concept is for 20 years, China went through incredible growth, and there were all kinds of opportunities for Chinese wealth to play quite a few areas and get great returns. The stock market, the housing, real estate market. I mean, even interest rates were phenomenal because they were trying to choke growth. So interest rates were really high. There were lots of ways to protect and grow your wealth during that incredible growth phase. But that growth phase is absolutely over. It's now transitioning into a steady state economy. And in that, those arenas where wealth sat for 20, 25 years, those don't work. And so the Chinese wealth holder is looking around and saying, well, where do I put my money now? The stock market is not okay. The real estate market is not okay. And interest rates are nothing. And they're rediscovering, they've always liked gold, but they're rediscovering that affinity for gold and that desire to put wealth into something that has such long-standing hedging ability. And so they're buying gold hand over fist. So the gold move is coming from China. It is surprising the Western investor. And so so gold equities haven't participated yet. What's the fix? I think the fix is going to start when we see second quarter results from gold miners. In the first quarter, the gold price really moved up at the end of February. So they only got 1 month of selling gold into this new high price regime. Once they put out their second quarter results and they've had 3 months of selling gold above $2,300, I mean, the profits that they are going to be able to post, every algorithm that crawls the internet looking for profit yield, dividend yield, things like that, will notice gold miners. And my hypothesis is that that is going to create the surge of investor interest in the West that has been lacking into gold stocks. So that's my hypothesis. That should happen, late July, right? That's when those results should start coming out. That's my outlook. Until then, we're still in a situation where if you look in the news wires and whatnot for stories about gold, those stories are still talking about interest rates and inflation as the reason for the gold move. But those aren't the reasons for the gold move. Those used to be the reasons for the gold move. They're not the reasons today. And that just shows that the Western investor isn't really attuned to why the gold price is moving. But if we start to get these profits from the gold miners, I don't know if they're going to care why gold is moving. They're just going to see profit yields and dividend yields, and they're going to start to move into the space.
Hey, excellent. Thank you. Very well put. Appreciate you putting your other hat on for a moment. Well, Gwen, any final thoughts? Anything that you'd like to mention before we wrap up here?
I think the thing that we haven't mentioned is the management team. And
Great.
I mean, I've given lots of examples of why this management team is is carrying out the remedies at the Madsen Mine that are so important. But truly, the Madsen Mine failed under the prior operators because the management team, the upper management team, didn't have the experience to make all of the right decisions. This management team is truly the opposite. I mean, Shane Williams, who's the president and CEO, has built mines all over the world for his whole career, iron ore mines, gold mines, all over the world, and very successfully. And he has, because he's such a credible, experienced operator, he has attracted a group to him who are similarly credible and deeply experienced. And so that's really fundamental to the entire thesis, right? If we're going to say that this team is going to fix what the previous team didn't do, it starts with the people. And one thing that a story that I like to convey is Shane, when they went down to the Madsen Mine and they restaffed with some of the people, some of the especially key personnel who had been there during the Pure Gold days, their first question is, what do you think we should do? Because these people were really involved in the operation. And what they did was they pulled out from under the table their plans. This is what needs to happen. And Shane was like, yeah, it is. And so a big part of what Shane and the team have done is they've empowered the very good people on site, the geologists and the mining engineers on site who knew what needed to do but weren't able to do it under the previous management team, to do their jobs and to do their jobs well. So that's a whole, management matters from how they raise capital, their experience, all the way down to how they empower their staff to do their jobs well. And that is a very important fabric in West Red Lake Gold.
Excellent. Well, thank you for ending on that note and making sure to mention some of the other team that you work with. We wish you lots of luck with everything that you're working on now in a busy summer. Look forward to catching up with you in a few months and hearing some updates. Thanks so much, Gwen. Have a great rest of your day.
You as well. Thank you so much for having me.
You're very welcome.